Hey everybody, welcome back to Tim Travels. It's Terry, your host. Today's video is the first in a series of probably 4, but maybe 5, depending on how our time goes, videos that I wanted to do to help people that are in a small business or considering creating a small business. And this doesn't necessarily have to be in trucking, it could be in anything. And I want to share, I've kind of shared stuff about my background, but I'll share a little bit more just so you know that I'm kind of know what I'm talking about and that I have some experience in this area. So I practiced law from 2002 until 2018, and I primarily focused on small businesses, commercial law, corporate law. I've done, help companies start up, companies that actually have become fairly big and done some good things in different spaces, especially in like healthcare law and stuff. But I've also helped a lot of small business owners. I had a lot of minority and women-owned businesses that trusted me with helping them out, and people that had franchises, etc. The other thing I've also done, and this will come into play in some of the other videos, is I've been a financial advisor. I worked for MetLife while still being licensed to practice law. And MetLife has changed its name now. It's not MetLife anymore. But I worked for MetLife. I had my Series 6, Series 7, Series 63, Series 66 licenses. And I even had at one time a Series 24, which is a general securities principal, because I was a compliance officer, kind of dual-hatted at a hedge fund. So I have experience in this area. I've handled money for people, their investments, their strategies. So I just want to share my knowledge. But let me just say at the outset, what I'm about to tell you at any time, but especially in these next few videos that we talk about, financial and business things, is I'm no substitute for you getting an attorney. I'm no substitute for you getting an accountant. I'm no substitute for you getting your own financial advisor that you feel comfortable with. Now, I'm going to recommend in a later video somebody that I work with who's a financial advisor. Guy I was in the Navy with, guy I've known for 20 plus years. He's also retired Navy. He was a SEAL, and he's shifted into financial services. And I'll give his information out, in one of my subsequent videos where we start talking about investment vehicles and stuff. But the 4 things that we're really going to talk about are entities, meaning types of corporate entities, and that's going to be today. Then we're going to talk about insurance for your business, both personal and business insurance, but how you can use insurances to create some wealth and avoid some tax liabilities. Then we're going to talk about investment options for self-employed people, but also just for anybody that's an employee, a company driver. What are decisions you should be making today to help you with your future out of trucking, or when you want to retire, or just to get to a place you want to be. And maybe that's out of the cab. And then we're also going to kind of intermix stuff with tax consequences, tax liabilities, tax strategies. Again, I'm not a substitute for your CPA. I'm not a substitute for your attorney. I'm not a substitute for your financial advisor. But I'm just going to give you some ideas so you know the right questions to ask. Because a lot of times, you've heard the saying, you don't know what you don't know. Well, that's the thing. If you don't even know to ask the question, you might not get the information on it. And that's the important thing, is to at least sound like you've heard of something to make that professional services provider realize you're serious about what you're doing. So that's kind of the basis of what we're going with. So let's talk about entities today, and let's talk about what kind of entity you need if you're going to own a truck or you're going to lease a truck. Well, here's the short answer. You don't need any entity. You can do what is called a Schedule C business. A Schedule C is a schedule, in other words, another set of paperwork on your IRS Form 1040. When you file a 1040 as your tax return, you just put all your business losses and profits on a Schedule C. So you don't need an entity, but you may want an entity, okay? Sometimes other businesses seem to think that it matters. So they're like, well, what's the name of your business? What's the EIN? Sometimes you're going to want liability protection. So, for example, most people are familiar with limited liability companies, okay, LLCs. They're easily formed and they provide you with limited liability, okay, hence the name. The thing about these entities, though, is they're not something you can just ignore. You still have to obey and adhere to corporate formalities. So when you file one of these, you have to make sure that you have a correct registered agent. You have to respond to the state Secretary of State or Division of Corporations, whatever it is, whatever it's called in that state, if they send you a letter and ask you something. You may have to file a tax return, even though an LLC is a pass-through tax entity. And we'll get into that a little bit more later. So even an LLC, which is a really simple form of a business association, is still something you have to pay attention to. You don't get that limited liability protection by doing nothing. There is a little bit of work involved. Now, if you want to take it to another level, maybe more sophistication, maybe you think you want to take on a lot of investors, or you want to become the next, Knight Swift Holdings, then maybe you want to incorporate. Now notice I said incorporate, because keep in mind an LLC is not a corporation. It's not an incorporated entity. It doesn't have a charter like a corporation. Corporations are chartered by the state they're formed in. So there's a couple of types of, well, really there's only one type of corporation, but I'll get into that distinction here in a second. So when you form a corporation and it's a for-profit corporation, you're forming what is generally known as a C-Corp, subchapter C under the Internal Revenue Code. Now, a lot of people also know that there's a thing called an S-Corp. But here's the thing. The S-Corp is not formed differently at the state level, which charters corporations. The S-Corp actually becomes that when you form a C-Corp, but then make what is called an S-Corp election with the Internal Revenue Service. Your accountant or your attorney can tell you more about that and how to get that done, and how to make sure that you maintain that S-Corp status. Because it's really easy if you're taking investment from somebody else to blow that election, because the IRS wants you to be a C-Corp. Why? Because you get taxed at the corporate level and at the individual level. And also C-Corps, there's a lot of formalities. You have to have annual meetings. You have to document a lot of stuff. You have to file quarterly tax returns, okay? It's great for your accountant. It's great for the IRS, but, for a small business owner, being in an S-Corp, and having that S-Corp election is more beneficial oftentimes. But you got to maintain it. So there are pitfalls to any one of those. Now, you can have an investor with an LLC, LLCs are not governed by their charter documents or bylaws. They're governed by what are called operating agreements. Even if you're the only member, the only equity holder of an LLC, you want to make sure that you have an operating agreement, okay? Because if something happens to you, or you want to sell the business, or you want to move assets around, you want to have some governing document. Also, a lot of banks, if they're not familiar with you, like if you don't have an ongoing relationship with a business banker, they're probably going to ask you for an operating agreement. And again, the secret on this is that a lot of times people ask for, your EIN or your operating agreement for no other reason than to just see if you're serious about what you're doing, like if you know what you're doing. Now, obviously, if you open a bank account, you're going to need an EIN or, your social. But, companies want to make sure that you have that authority to operate that business. And the way you get that authority is you give that to yourself. Now, you can manage. So LLCs, real quick, you have a couple of different roles. You have members who are basically the owners, right? They hold the equity. But you can also have managers. And here's the thing to keep in mind. An LLC doesn't need to have members that are human beings. They can have members that are corporations. Their manager can be a corporation, another business, a management company. At some point in the not too distant future, I want to own some trucks. And I will tell you right now how I'm going to do it is I'm going to have each truck I end up owning be in a separate LLC, and then I'm going to have a management company running all of it. So the members of the LLCs could be people, but in addition, there's going to be corporate entities that hold equity. That's perfectly legal. Lots of people do it. It can be a good way to set things up. So supposing for a moment you don't choose an LLC, you want to go with an S-Corp. S-Corps, well, let me back up real quick. The LLC, though, keep in mind that if you're a member of the LLC, right, like you're driving your truck, you don't get paid by the LLC. You get distributions. You're not an employee of the LLC, okay? So those distributions are only going to be taxed at the personal level. So you're gonna need to issue yourself what is called a K-1, and a K-1 is a reported distributions of profits or losses, basically, in an LLC, and it's on IRS Form 1065, but it's a K-1 report. You're gonna want that, and you're gonna need that for your accountant to do your taxes. Okay, you're gonna need, if you're taking distributions, like you're saying, oh, my LLC, meaning my truck that's in the LLC, made $5,000 this week, and after I paid for fuel and an oil change, and I got one new tire, etc., my net profit was $2,000. Well, you can, if you took that $2,000 and then put it in your checking account, you transferred it from the LLC to yourself, that's fine. But you're going to want to make quarterly tax payments, and you're going to need to make self-employment tax payments, and it's really easy to get behind on that stuff. I know that from personal experience. I've had my own business, and I've fallen into that trap. So I'm a sinner preaching to the sinful here, I guess. It's really easy to fall into that trap. So get with an accountant, do your estimated tax payments in full and on time. That will keep you from ever getting penalized or late fees or anything from any taxing authority, whether it's state or federal. Or in some cases, people have income tax, city income tax or whatever. So that's the thing to keep in mind there. You cannot, if you are an equity holder of an LLC, you cannot make yourself a W-2 employee of that entity. So S-Corp or a C-Corp, you can make yourself a W-2 employee of that entity. Now, why would you want to do that? Well, first of all, because then you're not only are the taxes getting paid on time. Let's say you use a payroll servicer, you just go through your bank and you trigger it. The tax payments are getting made constantly. The company's paying the matching, which sometimes could be less out of your pocket in real terms than your self-employment tax. And again, check with your accountant. The other thing is that you will have to pay unemployment tax. You will have to pay workers' comp because you're an employee. If something happens to you, let's say something happens to the company. Let's say you just don't want to do it anymore, okay? You could actually, if you've been a W-2 employee, you could lay yourself off, liquidate the assets of the company, and collect unemployment. Also, if you get hurt on the job, if you're a business owner, let's say you have an LLC and you haven't gotten yourself a personal workman's comp policy, which some companies do require that their independent contractors have those. But if you haven't gotten that and you get hurt, you're out of luck. You might be able to find somebody else to drive that truck for a while, but you're out of luck. But if you're a W-2 employee and you've been paying everything you're supposed to pay, you're going to have some coverage for a workplace injury, okay? And we'll talk more about insurance and disability and stuff like that. But being a W-2 employee makes things a little bit easier in a lot of ways. The one thing it definitely makes easier is if you're just starting out, let's say you're in your late 20s, early 30s, and at some point you're like, you and your spouse or you and your significant other are like, yeah, let's buy a house. It is going to be way, way easier. And you could talk to Lyle over at No Hippie Trucking and Transportation about mortgages, because that's what he did for a living before. It's way easier to get a mortgage when you're a W-2 employee, even if it's your own company, because they're not going to ask who owns the company. You're going to be like, I'm a W-2 employee of ABC Trucking. Here's how much I made last year. They'll be like, okay, cool. They're not going to be like, well, who owns ABC Trucking? Where does ABC? They're not going to ask you any questions. But if you tell them, oh yeah, I'm self-employed, I got this LLC, they are going to be all over you like a bad suit, and it's going to be tough. There are a lot of hurdles to overcome. And again, take this from my personal experience. I was self-employed and making a lot of money as an attorney, and I bought a house, and I swear I'll never do that again. I mean, it was not the first house I bought, and it was painful. Like all the stuff they wanted, it was just painful. If I'd have just been a W-2 employee making the same amount of money, they'd have been tripping over themselves to lend it to me. But when I was like self-employed, oh no, that's sketchy. So it's not, but that's how they think. So I share that with you. That's just a consideration kind of outside the trucking and business entity, but it is a thing. So just to kind of summarize, you don't need an entity. You can have an entity. There are advantages. I haven't discussed all the advantages and disadvantages, but you need to get a little bit of help, okay? And, LegalZoom is not help, okay? I know they're running a business. I know they're legit, but they're not legal advice. They're no more legal advice than I am, okay? So spend the money to be professional. It will pay off in the long run. And we'll talk about that in some of these subsequent videos about how it pays off. When you pay somebody $1,000 to review a document that keeps you from making a $50,000 mistake, that's $1,000 well spent. So I share that with you. I hope everybody's doing well, and you know, keep it between the mustard and the mayonnaise, and I'll catch you next time. We're going to get through these videos fairly quickly, but I'm trying to keep them to 25 minutes or less so they're easier to digest. Please hit me up with your comments. You know, I'll put my email address in the description. Please subscribe, like, comment. We love all our subscribers, and we'll see you next time. Thanks.